Okay, so let's move on to Todd's question. Todd says, I use canslim, the IBD canslim list, I believe, and canslim ideas as basis for my stock selection. Do you or anyone at RadioActive Trading use their market timing indicator, distribution follow through days select, when to or not to trade with the married put structure in the market? Okay, let me make sure I read that right. To use their market timing indicator, distribution follow-through days to select when not to trade, or is limited to married put strategy always in the market? Okay, read that a little bit wrong at first. I am always comfortable entering a married put. I don't do the, we do have, of course, our own little market sentiment tool, and if this goes to light bullish after moving to slight bearish, I will jump into the married put positions in earnest. All right, when I see this go to a small buy or a light buy, I'll start buying more of those. I specifically don't use the canslim distribution you're talking about, that other indicator. We do use, of course, a list that contains some of those stocks for our married put screening, okay, that match the that sort of IBD screening, but I don't use their indicators. Okay, I use mine, and I'm always comfortable entering a married put. And when I see a time frame, if perhaps, there's certain indicators across the broad indexes, say SPY, or, SPY drops below, the 50-day drops below the 100, or the 100 drops below the 200, and it looks like it's going to be extended decline, I might shift the pattern here and do married puts in a different structure, following the rules of that's in that members-only webinar in RadioActive Trading for playing the radioactive trade in a bear market. I might do the structure differently. I might look at inverse ETFs. I'm not going to do a married call, but I might do something else, counter or inverse ETFs, and just open a married put on those while the market's declining. But then I have to realize I have to get out of those sooner if it starts to recover, because what do we usually see? Quick decline, and then a longer-term growth after that. We are in the headline-driven news market, so it's harder to catch those. I've been saying for a couple of weeks that I was going to open some married puts, and the two that I was going to open actually both failed their earnings, so they were looking strong, and I didn't open them. Should have opened them with the income method number 12, Todd, but I didn't do that. So I'm going to look for new positions next week that I think are more bullish, even though a lot of things are declining recently, and we're still in this little concern. Sam even sent me an email earlier today. He's usually here on our Friday sessions. He did make it today. He said he wasn't going to make it, but he's been on the sideline the last week, and he said it was too much going on with the ups and downs to really focus on the profit without getting whipsawed. So he's kind of on the sidelines right now, and that's okay. There's nothing wrong with that as well. So it's been a little bit difficult week for everyone involved and everyone going forward. However, I'd rather be in this structure than trying to time a bull put credit spread, a bear call credit spread, an iron condor, or something along those lines if I'm concerned about timing, if I'm concerned about the decline as well. So those are just my thoughts there. I always think it's a good time to open a married put. Yes, I'd prefer to open it when it's bullish. When I think the market's strong, naturally, if I see that light buy trigger show up on the market sentiment tool there, we see that. There we go. When we see that go into perhaps a light buy, I don't know when the last time it was in a light buy. Let's see if we see it in the sentiment history. I don't think we will here. Yeah, it's been in that neutral zone for a while, which makes sense, doesn't it? Since we saw the big move on 8.5, and I think a light buy came up after that. But since then, it's just been hovering around here. Let's see if I can see one. It's been hovering around the neutral range. There it is, that one light buy on 8.5, right? Why? Because that's when we had that big decline, the 600-point movement in the Dow. It triggered some 5 indicators to go to slightly bullish, with 8 as neutral, so we went into a light buy mode. And that was probably a good time to buy in. You go back and you say at that time the SPX was at 2844, and slowly after that we got up to 2924, 2923, and it's back to neutral. But we can also argue that, this was the time when this was triggered, but from then on, 2881 up to 2938 is a pretty decent move of 50 points, then back down to 2882, 2926. This is pretty neutral, isn't it? It's just going up 40 points, down 40 points, up 40 points, down 20, up 20, down 20, and then the last couple days we've moved down 80 or so. Okay, we didn't hit a light sell here for that warning, but again, we're getting close to that peak there going into 826 as well. So, short answer there, Todd, I don't use that indicator on that you mentioned, the canslim indicator, the IBD indicator that you're talking about. I'm not saying it's a bad idea. I'm not saying it's a bad idea to try to look for anything you feel is been successful to you, that you've seen good results to indicate bullish moves, bullish markets, and more. There's nothing wrong with using that in your analysis of when to get into a position that is by nature bullish. We have the 12 income methods that we discuss in the blueprint, of course, so that if the stock does move up, 5 or 6 of those income methods are best used in a bullish market. 2 or 3 are best used if the stock stagnates. A couple of the other ones are best used if the stock falls in price or we think it's going to continue to fall in price. So that's why there's 12 income methods for different markets. And that's what's available in the blueprint. The proper way to limit risk, of course, structure of the trade, keeping the risk to single digits. Yes, general structure we can see here is bullish, but we're giving ourselves a lot of time, the proper structure, so that we can withstand little market movements like this without even taking near the maximum loss because we have time on our side, but then using those 12 different income methods to hopefully get us up to more of a bulletproof status to lower the risk and then maybe get to a bulletproof status where we've canceled all of the risk and still have that unlimited upside approach, always with not be getting more than, let's say, 5 to 6% at risk. And that's what's described here is not only the proper structure, how to use it, when to use it. I always feel comfortable using it even if the market starts to turn bearish, get some good deals. I like to try to call the bottom if possible. Doesn't always work. But then in here is also the 12 different income methods that are available. Now, all of that being said, this leads me right into Nancy's question. And, Nancy asks, of course, something related to this. Recently, Kurt put together some ideas and concepts, and he did 6 weeks of videos and discussion and Q&A sessions, interactive Q&A sessions via Facebook on 2 new income methods, income method number 13 and 14. So now in reality, unfortunately, there's actually 15 income methods. Many of you have heard me say over the years, the last couple of years, that there's actually 13 income methods, and the 13th income method is do nothing. If none of the discussions here in the blueprint of when, how, and exactly why, and the structure of each of those 12 income methods, if nothing matches what you feel is proper for your goals, then exercise income method number 13, which means do nothing. Now that's income method number 15. But to Nancy's question, she says, how do I receive income methods 13 and 14? I missed the emails while I was traveling over the summer. Well, Nancy, I hope you had a great vacation. As I mentioned, Kurt did this. He put together this Facebook users group, which I think is still open right now. I'll have to check on that for you, Nancy. Oh, actually, you were working. I'm sorry. You took a vacation from trading because you were working. Gotcha. Well, I hope you enjoyed working this summer, Nancy. My apologies. In any case, I will look into that because I'm not sure if the group is actually still open. He hasn't been posting anything since he wrapped it up. His plan is to take the content, the discussions, the examples that he used, actual trades he used to do 13 and 14 there as well. And what he's going to do is put that into other content in a different format. It's either going to be a collection of videos, collection of articles and videos. I'm not entirely sure yet, Nancy, what he's going to do with that as far as that goes. I know something's coming out. I just don't know what it's going to actually look like. It's going to be a mix of videos, probably text, PDFs, electronic delivery as well. And I'll have more information on you. I'll have more information for you on that soon, Nancy, I promise. But right now, that's the plan. There's nothing that's been released yet on the full descriptions of 13 and 14 due to the fact that most of this summer as well, I was finishing up my larger project on the bull put credit spreads, and all of the knowledge I have on bull put credit spread, that's going to be available in a different product to be successful with bull put credit spread trading. So I wasn't actually reviewing all of Kurt's videos that he did in those discussion groups Another reason why is that on Fridays he was posting a Friday video through August and parts of July on Friday at 4. So I would catch the first 10 minutes of his discussion on Facebook, then have to log off to start my 4:30 on Friday presentation as well. But that'll be coming out soon, Nancy. Every existing member, that's everyone who's an existing Blueprint owner or a member of Fusion, will start to receive more information about the concepts of 13 and 14 as well very soon. I'd say at least by mid-October. And at that point, you'll have more information of how you can, of course, access it and what other plans are available for other examples and further education for 13 and 14. I have a very general idea of what they are, but I haven't studied them in depth to show you a good example of a 13 or 14 that would match his criteria. So I'm waiting till he hammers that all out, what his experiences were with the several trades he made over the last 6 weeks to show the pros and the cons of both approaches, before I comment directly on the SIGA model for those two income methods, their actual structure, and what are the best strike prices. Okay, so that's what we're going to do. It'll be information will be available soon, Nancy, and I will try to get you added on to that Facebook page if you have a Facebook account. Get you added to that group there, or be able to find a way to get you some of the videos that were recorded and archived on that group as well. I'll look into that probably later this weekend, if not this evening, after we get offline. We took the same married put structure, but just did it on S&P 500 stocks, NASDAQ stocks, stocks with this technical indicator or not, and we saw how those performed over a 1-year and 2-year period. Guess which one won? Don't have to tell you, but the information is there. We do these tests all the time. Certain checkpoints we have listed to make sure that we're still posting search criteria that's available. Okay. Going back real quick to power options, I want to check something else here. I do apologize. One more second, I'll leave this up. While you're looking at my screen, is this in alphabetical order? It must be. All right. Perfect. I'll cover this too. We still have time. It's only 5:35, but 2 questions. I saw just a question came in from email from a gentleman who's sorry folks, there we go. A gentleman who's not in attendance with us right now. Doesn't look like. And okay, so let's go back to power options. Mark K sent in a question via email at 4:15. I missed it because I was putting the slides together for Don's question, and Mark does not look like he is on the webinar with us. But going back to our discussion we just had on married puts, I created the webinar for you to show, shows you where the webinar was, to show you the performance and why we trust the stock search and the stock results on the married put screen, why it worked best for us over those time periods, outperforming the other listings. Mark had a strong question though, and it's a common question that I get, and I like to address it. And it's already addressed in some of the members-only webinars for Fusion and Blueprint owners, but we have no problem doing it here. Mark's question: rather than use the general search, if I'm only interested in safe income for married put positions, how can I create a search just looking at dividend-paying stocks? It is extraordinarily simple, but it does have some complexities with it. Let's talk about it. Over on the right-hand side, I wish I could zoom in here, but I can't, but over on the right-hand side here, while you're in a search, you see the exact criteria that are being used for the default screen. This is my default married put search, the RadioActive default search sorted by earnings per share growth, more driven stocks. Our RadioActive defaults, put has to be at least 150 days out, keeping the risk to single digits. Not going more than 20% in the money. There is such a thing as too deep in the money and too low of a risk. Bid-ask spread and some bid-ask spread percentages, and that's essentially it for the put structure. Average stock volume, okay, I usually increase that, but it's greater than 300,000. We want some volatility. Red check number 1. We usually specifically look for positions, stocks that have a 25% volatility, historical stock volatility. And yes, we want a stock in an uptrend. $9 and $200, that's personal preference. Earnings per share growth, I want to keep that. But then we're looking at this sort of combined stock list of different stock lists we've put together that not only help us with the volatility which we want for better income, selling premium for some of those income methods and more, but also trust the stock search is what outperformed other screens that we compared, and that's available in that webinar. Now, to look for dividend-paying stocks is simple. All I have to do is just go into the fundamentals, say percent dividend yield, just show me any of the stocks that match the current list with only a 2% dividend or more. If you want higher, put in a 3% dividend. That's fine. Let's submit it. Not bad. 6 results. Citi, Ally. Every time I have a webinar, Ally's right there. It's just mocking me. Bank of America, MetLife, Target, BPOP. Okay, so there's only 6 results. Not bad. But there's hundreds, if not thousands, well, maybe not thousands, but there's hundreds of optionable stocks out there that offer at least a 2% dividend. Where are my big names? Where is Costco, for example? Where is Johnson & Johnson? Maybe you don't want to trade that now, but where are they? They're not in the list because of 2 things. One, most stocks that are the big name stocks, Mark, that pay a higher dividend, a quality dividend or quality movers, will not have a stock volatility of at least 25. We've got to bump this down. Let's try 0.10. Let's just do that first and submit it. All right, we added 2 more. TE Connectivity, I'm not familiar with. Eli Lilly. Okay, so we bulked that up. Very nice. We got 2 more in there. That's a good percentage gain, but it was still only at 8 results. What else is missing? Well, a dividend-paying stock is going to have a lower risk going half a strike or 1 strike in the money because of the lower volatility. I can tweak the maximum risk field also if I'm looking for a dividend-paying stock. I might go just 2 to 6 and still be only no more than 1 or 2 strikes in the money in this case. This might not add any more. In fact, it didn't. Okay, but sometimes when you lower this down on a low volatility dividend stock, you can go only 1 or 2% out of the money and have maybe only a 2% risk on the position. The third key here now adds the complexity. So number 1, I have to change the volatility. Number 2, you can lower this. Number 3, the lists. Those lists that we're using to look for more volatile stocks that are showing more growth are already limiting out dividend-paying stocks. There might not be a large quantity of slow-moving, relatively high dividend but quality stocks in those lists because they're looking more for a growth. We saw 6 to 8 dividend stocks that had the volatility that we wanted, that were in the list we wanted and are showing good growth. I like them. Knock, knock. Allie again. But so here, if I take that list out, I'll now screen across the entire universe of options for anything that pays a 2% dividend, now matches the new volatility, but matches this other structure that I've just changed. Now I've got 80. That's too many. In my opinion, it's not helping me save time, Mark. I want to filter this down further. How are you going to filter this down further? We were using a specific stock list that works for us and outperforms other stock lists that we've seen through testing and more. But there are some things I might want to add back in that might already be taken into account. For example, I might want to go up to at least 750,000 shares on average per day. You might want to use an RSI, for example, or a specific beta. I don't know. But by taking out the lists that we were using, we open it up into the entire universe. There might be some stocks in here we might not consider trading, even though they pay the dividend that we want. Fundamentals, we've got the earnings per share growth in there. Maybe I only want to look to mid to large cap stocks, so I'll plug that in. Maybe now, hey, if I'm happy with a 2% dividend, I'll be happy with a 3% dividend yield, right? Let me put that in as well. So I'm sort of covering some of the stock criteria that might have already been inherent in those lists for stocks to be considered in those lists by changing the technicals because the list was too big. If we take it down from 80, yeah, I cut it in half with just those few adjustments. That's pretty good. So now what have I got? A dividend-paying list on stocks with good volume and have shown good growth, mid to large cap stocks with a 3% dividend, and we've got some good risk-reward profiles: Valero, Weyerhaeuser, Exxon, Blackstone Archer Daniels, and more. And you've got 3 pages, but I've cut it down to 41. So that's the approach. If you feel that you want to do the dividend-paying stocks, first thing you do, adjust the volatility requirement in the default search. If you do take out the list to open up the universe more, put in some other stock criteria for mid to large cap stocks, larger average per share growth, good moving average trend, and what other indicators you'd want to use that qualify it for a good, strong stock for you. All right, that's how you'd set up the Married Put search to look for dividend-paying stocks. We found a good 5 or 6 results without changing much, just lowering the volatility with the list that we prefer and putting in a 2% dividend. But if you wanted to go more, take out the list, add in those extra criteria.